Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and all that wonderful stuff. We'll be spending a fair amount of time taking a look at the on-chain metrics, seeing whether or not we've got anything to be concerned with. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out guys, a link in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's waste no more time. Let's jump right down into this one. Let's load up our on-chain metrics here, and what we're going to do is we're going to focus in on what is going on at the top right hand corner to start with. Okay, inflows, outflows, and then the difference between the two. So up here we have total inflows across the exchanges since the 1st of January 2023. It's 1.3861 million Bitcoin going onto the exchanges. Then we have the outflows. This is Bitcoin coming off the exchanges since the 1st of January 2023. It's 1.3876 million. We now see a difference of negative 1.54 thousand leaving the exchanges. Okay, so essentially I think it was like yesterday or the day before, we saw that there was a slight increase on exchanges. That's now been taken off over the weekend. Some retail investors probably will jump into where that's kind of flowed to in a moment, but it does look like we finally started to see a little bit more of accumulation, but it is still incredibly minor. Now over here on the left hand side we have the Bitcoin exchange balance. This is represented as a line chart. How much Bitcoin do the exchange wallets have, right? And we can see that it's been flowing onto the exchanges, but it's just been kind of just trading sideways, right? It's very neutral. So it's not that Bitcoin is leaving the exchanges necessarily, it is more that it is just transferring between participants and staying pretty neutral. Over this side here we can see the net difference change. Each one of these bars is 30-day average. It basically is the difference between inflows and outflows represented as a 30-day average. Now down here we can see that during FTX we saw a lot of withdrawals from the exchanges. You can kind of see it on this line graph of Bitcoin coming right off the exchanges, and then pretty much since December Bitcoin's just been flowing back onto the exchanges, and it's been incredibly flat pretty much from here, which is about the 14th of January. As I said, these are average day bars, and from here on our line graph it's actually around the 18th of December that we just started this kind of flat sideways trading. So we do know that there's not really a lot of demand coming in. It's pretty neutral. It's just whatever kind of demand is there is being equally met by the supply, and it balances everything out. And you can see here that this is not bullish nor is it bearish, because it isn't really giving us an indication into either direction. It's just incredibly flat and incredibly neutral, equal demand and supply. Now, the definition of a bull market would be when the demand outpaces the supply, as in there's so much demand the supply just simply can't keep up with it and price rapidly moves to the upside, right? And then in a bear market, it's the opposite. You have the supply that outpaces the demand, and essentially, you know, the price dumps so hard because it just has so much supply just drowning out any potential buyers. Now, essentially, when we end up with this flat particular scenario that we're in, this essentially just means to us that we are not bullish, we're not bearish, we're somewhere else, somewhere in the middle, waiting for a market to decide which direction to go in, which is unusual considering the amount of people that are saying that we're in a bull market, yet we do not see the demand that actually symbolizes the very definition of a bull market. Instead, we see this flat neutral positioning. It means it can go in either direction, and as soon as we had either ample supply coming in drowning everyone out, or we see significant demand coming in drowning out the supply, you know, the market can go in either direction. I personally think it's going to go to the downside because we're not seeing the big participants from institutional investors, which we'll get into in a moment. The hodl waves, I'm not going to go through that today, but it does look like Bitcoin has just been aging. There's no major shakeouts or anything like that from what I can see. Let's carry on. We'll get through the inflows and the outflows. Over the weekend, pretty much typically, we see a decrease in the activity. Low demand usually over the weekends, low inflows, low outflows, and here you can see we saw significant inflows, which is the red line, on the lead up to the weekend, and then basically coming down here we see retail investors basically buying up a little bit or withdrawing from the exchanges a little bit. 17,000 going on, 17,800 coming off. on Saturday, and then on Sunday we saw 14,600 going onto the exchanges and 17,100 coming off the exchanges. So we can see a little bit of accumulation over the weekend, and of course retail investors are the kind of culprits behind that. But as we kind of get into this, we can see some really interesting stuff, specifically when we talk about Bitcoin Dust. Bitcoin Dust essentially is a wallet that has over 0.001 BTC, or 0.01 BTC, I should be more specific. Okay, so what we see here is a significant decrease with low retail wallets. Okay, so low Bitcoin held wallets. So these are basically the poorest Bitcoin holders, essentially. Okay, and this is quite unfortunate, but something that I thought would be occurring. These are probably the most vulnerable people in the crypto space, unfortunately. Have some Bitcoin, but it's not really a huge amount of Bitcoin, and unfortunately these are the ones that you want to be successful, but unfortunately are the ones that are being shaken out. So as you can see, as we kind of reach this upper area here, there were 11,588,509 wallets. Now, as we come down here, there's 11,486,000 wallets. So we've dropped down just, about 100,000 wallets. So 100,000 wallets have succumbed to the pressure that Bitcoin is piling on. The only thing I can hope for is that they've made money out of this and they are taking profits as we were looking to move up higher. So we'll see how that kind of has played out. But for now, 100,000 wallets have dropped off out of this range, which is very, very significant. So it's 100,000 less people holding at least 0.01 BTC. Now, as we come up into the retail investor side of things, we do see a little bit more of a shakeout as well. The krill, which is over 0.1 BTC, has dropped down. We did peak up here at 4.231, so basically 4,231,000, and we're down here at 4,225,000. So we see a total of around 6,000 wallets being dropped off there as well. Now, over on the shrimp side of things, the over 1 BTC, we can see these also decrease from 981,876 to 980,375. So again, we actually see about 1,500 wallets here decreasing and coming out of their positions. So again, we see retail investors starting to sell off. We can also see the dolphins did pull back a little bit and started to maybe buy up a little bit around here, but again, not overly too concerned with these guys. I mean, these ones are high net worth individuals, 10 Bitcoin or more. They did peak up here at 155,486. Right now they're at 155,354. So a reasonable amount being shaken out as it came down, pushed back up and started to come back down again. It is what it is. We'll be keeping a close eye on these retail investors. Now, as we come over into the institutional grade wallets, these are pretty significant sized portfolios. We have the sharks, which are over 100 Bitcoin per wallet. We have the whales, which are over 1,000 Bitcoin per wallet, and the kraken over 10,000 Bitcoin per wallet. We can see the obvious, which is that basically whales continue to go down. They continue, the black line here is a number of wallets that have over 1,000 Bitcoin in them, decreasing. And this is pretty much the common kind of thing that we've been seeing for a while. And right now, I mean, if we were to think about where the price was just up here, they peaked in their wallets at 2,049, and right now they're at 2,027. So again, we can see that there's about 22 wallets dropping off there, holding at least 1,000 Bitcoin. The sharks obviously accumulated way before the pump here and have been kind of slowly coming out of their positions here as well. Again, slight uptick recently, but nothing too much to kind of concern ourselves with. The Kraken size wallet have been coming down. So this is a 10,000 Bitcoin or more. And we can see that they did come down over the weekend to 115 wallets and just went sideways from there. So I'm going to show you the kind of zoomed out view of these. Okay, so I'm going to come over to the retail size wallet, which is the shrimp, 1 1 Bitcoin or more. You can see that during every dip, during this bear market, they've been accumulating, whether it was the June lows when they were told by these moon boys that the bottom was in, all the way through to November lows where they were told that the bottom is in. You can see that there's huge significant surges on both of those, but they have started to kind of plateau a little bit at the top end here. The Bitcoin whales continue to come out of their positions. Okay, so if you think about it this way, these guys are buying, and in order for them to buy, there has to be a seller. It turns out that the whales are the sellers. Okay, so pretty much up here from March 2022, these guys have been pushing Bitcoin in directions, liquidity hunting and all of that kind of stuff, but have been coming down. Now, if we think about this, I said this before and I'll say it again, I'll say it as frequently as I have to until people understand it a little bit clearer, but we do have the June low, 19th of June 2022. Okay, so when we hit this low point and people were saying that the bottom was in, I was sat here and I was saying it doesn't make sense that the whales are selling the bottom. They're either making a catastrophic mistake and they were selling the bottom as price was going up. Here you can see that these guys were basically coming out of their positions. The black line was going down. That's the number of wallets that hold over 1,000 Bitcoin was decreasing as this theoretical bottom was in. All those moon boys telling you that the bottom is in, we should be dollar cost averaging and buying Bitcoin because we're going to the moon. And of course, you know, we see them coming out of their positions here, right? We then see the same thing in November, right? November, after FTX, we had the low coming in, and what do we see the black wallet line doing? These wallets of over 1,000 Bitcoin, well, they're going down, right? They're selling the bottom here, right? If the bottom was in November, then just like in June, the whales have been making a catastrophic mistake and have been selling the bottom, right? We saw how that ended previously. Do we think that the bottom is in if these guys are not buying? So again, people buying up, if we come over to here, the bottom comes in, we see these wallet accounts increasing because, you know, the bottom is in, and exit liquidity. We can see that these wallets are coming down, right, in size. So they hit a low over here in December, right? And then they hit another low on wallet counts over here in February, and we're heading down into new lows as well. In fact, we're at equal double bottom in wallet counts on these whale wallets right now. So again, we ask ourselves, do we think the whales are making catastrophic mistakes and are selling the bottom, or do we think that the whales know exactly what they're doing and the bottom is not in? I'll leave that for you guys to decide. Now, when we take a look at the Kraken-sized wallet, the Kraken-sized wallet has been accumulating during the bear market, and it has started to kind of pull down a little bit here, testing the waters possibly. Now, the Kraken-sized wallet is an interesting one. This is over 10,000 Bitcoin. Now, again, in the same scenario as we saw with the November lows coming in, we had a high of 123 wallets at the end of November. Right now, we're at 115 wallets as price had been pushed up. Exit liquidity, again, on the backs of retail investors. These guys have been making significant amounts of money by selling into this move to the upside. So understand that these guys are not really looking to make a lot of money. What they're looking to do is accumulate BTC in the most efficient way possible, because what the Kraken wallet likes to do is this. These Kraken-sized wallets accumulate during the bear market and then flood the market with excess Bitcoin to bring in the actual bear market low. This particular setup is very, very similar because it looks exactly like what is happening right now. We've moved up quite aggressively. We've had a slight pull to the downside here in terms of wallet counts, and then we're kind of just sat here. Now, if I take a look at the 2018 bear market, we accumulated, we took a little bit of a dive here, we rally up again and then flood the market. Now, the only difference really between these wallets is we haven't seen these whales doing any of the buying before that flood. Okay, so it does look like we need to see retail investors get shaken out, sell their Bitcoin to the whale investors before we can bring in that bear market low. And this is what it looks like from a 1 Bitcoin shrimp perspective. Basically, this was the bottom, no, this was the bottom, then this was the bottom, and then this was the bottom, and then essentially you just trade sideways here. And during this sideways trade, this is where the retail investors are selling. They sell right into the bottom after paying premium prices all on that journey before selling at a loss, right? And then, of course, that is where the whales are buying during this flat period, and then it is where the Kraken-sized wallet really brings in that bear market low. These things are all interconnected together. So it's important that we understand that where we sat at the moment is that large institutional investors, the Bitcoin whales, the Bitcoin krakens, they are just coming out of their positions, right? And essentially only retail is coming in and propping up the market, but even retail is starting to falter. It's starting to decrease. Okay, so from the kind of the bigger macro pieces here, we should be aware that essentially it does appear that we are making progress, but we are not actually in a bull market, not yet, not until big money decides it wants to come on in. So when we take a look at our price chart and we reflect on where everything sits, we know that the underlying data is suggesting to us that we potentially do have further downside to go to before we can actually see the end of this bearish market. And all we've really been in is in a bear market rally. Now, on this daily chart here, we can see that we have had these fair value gaps left behind. And we can see that a couple of really interesting things. I spoke about this morning. First of all, we have a strong high. This is up in the premium area. And we have a discounted area down here that is a weak low. Okay, so basically what this means is we've tested this area here 4 times. Okay, and it's basically been resistance. It's a strong high point, unlikely to break. Then down at the bottom here, we've only tested it once, and it's a discounted range that is incredibly weak. Okay, now we do obviously see the other big thing here on our daily chart. Okay, let me actually go ahead and just clear out some of these white lines because we don't need these on here. Let me just go get rid of those. The other things that we can see on here is this. Okay, we had a change of character here. Okay, so basically we're coming down from our bullish market after a break of structure here, and we barely broke it, to be fair. Okay, so we had this bullish movement to the upside, which we saw over here and over here, and then we had these little minor ones up here as well, taking us up higher. Okay, and then what we saw is this change of characteristic. Okay, here. Okay, we then saw a break of structures. We saw some break of structures and change of characters, and then we got this big confirmation just here. Now, this big confirmation of break of structure after our change of character happened over here. Okay, on the journey to the 15,000 and the week low. Okay, so it does look like, because we haven't had any major change, we've had some minor ones, change of character here, break of structure here, for example, some minor changes to positivity, but we haven't broken the downward macro yet. Okay, and this downward macro is telling us that we have further downside. Okay, so when we take a look at all of this, we have to kind of bear in mind that not only have we got underpinned data that is basically suggesting that institutional grade investors are avoiding Bitcoin and are just basically using retail to come out of their positions, we also have the bigger macro pieces telling us that we have still got a bearish structure to the downside that has not yet been broken. We have a strong high because we tested it 4 times and been rejected each and every single time, whereas we have a weak low that's only ever been tested once. So high probability here of moves to the downside. We layer in the stochastic RSI, the oscillator, that shows strength in movement, and we're overbought on the weekly, overbought on the daily, and I do think progression to the downside is highly likely, but do not expect straight lines. Nothing moves in straight lines. It will be a slow, gradual burn to the downside. My worry, as I said earlier, is essentially that we're likely to see, big drops in Bitcoin's price, dragging the entire market into a multi-year bear market. Something that I was hoping to avoid, but looks like something that is going to actually play out. I'm going to leave this video right there, though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.